let us take one more illustration where we have to prepare trading and profit and loss account and balance sheet. So where from the following balances extracted from the books of Yogita as on 31st March 2005. So we have a trail balance here where we have debit balances and we have credit balances from which we have to prepare a trading and profit and loss account. So then we have in the debit balances we have cash in hand, cash at bank, so purchases, return inwards, wages, fuel and power, carriage and sales, carriage on purchases, opening stock, buildings, freehold land, machinery, etc. So from these debit balances as well as the credit balances, we are going to prepare trading and profit and loss account and balance sheet. So from this trial balance, whatever direct expenses and direct expenditure and incomes we have, we are going to take in the trading account. So like we will be having opening stock, we have purchases, we have sales, return inwards, return outwards, then we have fuel and power. These things we are going to take in the trading account and even the wages. And other than that, whatever expenditures we have, we are going to take in the profit and loss account. Then when coming to the assets, like we have machinery, freehold land, building, then these things will be recorded in the balance sheet. Now coming to the adjustments, taking into account the following adjustments, we have to prepare a trading and profit and loss account. So now let us have a look on the adjustments what we have. So we have stock in hand on March 31st 2005 was rupees 6,800. So this is nothing but the closing stock which we have to consider in the trading account in the credit side. Then again same we have to record in the balance sheet in the asset side. Then we have machinery to be depreciated at a rate of 10% and patents at a rate of 20%. So this depreciation we have to charge in the profit and loss account, and the same value will be deducted from the particular asset in the balance sheet in the assets side. Then we have salaries for the month of March 2005 amounting to rupees 1,500 were outstanding. So here salaries still we have to pay, which is our liability. So this will be recorded in the balance sheet in the liabilities side. Before that it is an expenditure which should be paid, that will be recorded in the debit side of profit and loss account. Then we have insurance includes a premium of rupees 170 on a policy expiring on September 30th 2006. So when coming to the trading and profit and loss account and balance sheet, we are preparing for the year ending March 31st 2005. But coming to this point, what it means that the insurance policy or the insurance amount includes a value of rupees 170, which is a premium for the policy which is expiring on September 30th 2006. Then we have further bad debts are rupees 725 and create a provision at 5% on debtors. So here we are charging bad debts in the trading and profit and loss account. In profit and loss account in debit side it will be shown along with the provision of 5% on debtors. Same values will be deducted in the balance sheet in asset side from the debtors. And rent receivable rupees 1,000. So rent receivable is what we are supposed to receive. So which is our income, today or tomorrow we will receive that. That will be recorded in the profit and loss account in credit side, and the same will be recorded in the balance sheet in asset side. By considering the following information, trial balance and adjustments, we have to prepare trading account and profit and loss account first. So the title will be in the books of Yogita, trading and profit and loss account for the year ended March 31st 2005, where the format will be expenses or losses amount, in revenues or gains amount. So where we are following nominal account rule, debit all expenses and losses, credit all incomes and gains. Coming to trading account, first we are going to record the entries in the debit side, where we are going to start with the opening stock. So let us take in the debit side first, opening stock, where we have 5,760. Then we have purchases and less return outwards. So what commodities we have purchased, from that we have returned some goods. So that is what return outwards that should be deducted. So again debit side purchases in the inner column 40,675 less return outwards 500, then to the outer column 40,175. So when coming to direct expenses, we have wages, fuel and power, and we have carriage on purchases. That should be recorded in the debit side here. So when coming to the wages, we have 8,480, then we have fuel and power, which is 4,730, then we have carriage on purchases, which is 2,040. So now let us record the entries in the credit side, where first we are going to consider the sales, but coming to sales we have written inwards. So what commodities we have sold, from that some of the goods were returned to us. So that is what written inwards. So let us take in the credit side sales in the inner column 98,780 less sales return 680, then the outer column 98,100. And we have closing stock, which is given in the adjustment, that should be recorded here in the credit side. Closing stock 6,800. After recording the entries, we have to close trading account, so that to find out gross profit or gross loss. So when comparing the both the side totals, we have excess total in the credit side, which is 1,04,900. Let us record the same in the debit side, 1,04,900 minus the above entries. The difference we have is 43,715. So which is nothing but gross profit carried down 43,715. So when coming to the trial balance, we have salaries, and in adjustment we have salaries outstanding, that should be added to the salaries. So let us take in the debit side salaries in the inner column 15,000, add outstanding salaries, which is 1,500, and to the outer column we are going to record 16,500. Next we have carriage on sales. So when coming to the carriage on sales, sales will be made out of the production area. So here the carriage on sales will be considered as indirect expenses, but when coming to carriage on purchases will be considered as direct expenses. So let us record in the debit side carriage 3,200, then we have general expenses, which is 3,000, again general expenses 3,000, then we have insurance. So as I said, when coming to the insurance policy, so coming to the debit side again, insurance 600 in the inner column, less prepaid insurance 85, then to the outer column 515. Next we have further bad debts, which is 725. We are going to take here in the debit side again, further bad debts in the inner column 725, add provision for bad debts, which is 689. So the total bad debts will be 1,414. Then we have to charge depreciation on machinery and patents according to the adjustments. When coming to the total of credit side, we have excess, which is 53,715. Same total we are going to record in the debit side, 53,715 less the entries what we have in profit and loss account. The difference we are getting is 25,586. So that we are going to write above the total, and the entry will be net profit in bracket transfer to capital account. After preparing trading and profit and loss account, we have to prepare a final account, which is nothing but the balance sheet. So the title will be balance sheet as at March 31st, 2005, and the format will be liabilities amount, assets amount. So let us start with the liabilities side, where we have in the trial balance sundry creditors. So let us take in the liabilities sundry creditors 6,300, and we have outstanding salaries 1,500. Then capital in the inner column 62,000. To that we have to add net profit. Add net profit 25,586. Then the total will be 87,586. Then from this we have to deduct the drawings, less drawings 5,245. Then to the outer column 82,341. After recording the entries in the liabilities side, we have to come to the asset side. So when coming to the asset side, we should have a practice that if when starting we have to write cash balance and bank balance, if not we have to write at the end. Cash in hand we have 540, and cash in bank we have 2,630. Then we have sundry debtors, which is 14,500. From this we have to deduct the further bad debts and the provision for bad debts. less provision for bad debts 689, then the outer column will be 13,086. Then we have insurance prepaid, which is for the next year. Again it is an asset, insurance prepaid 85. Then we have stock, which is closing stock, 6,800, rent accrued 1,000, freehold land 10,000, buildings 32,000, machinery 20,000. But coming to machinery, we have charged depreciation in the profit and loss account, that we have to deduct here because depreciation is nothing but decrease in the value of asset. So let us reduce that. Machinery, inner column 2,000, less depreciation 2,000, outer column 18,000. Then we have patents. Again for patents we have charged depreciation, that has to be deducted. So patents 7,500, less depreciation 1,500, then outer column 6,000. So after recording all the entries, we have to see that whether the balance sheet is getting same total for liabilities as well as the asset. So let us take the total of liabilities side, where we have 90,141, and let us check in the asset side, where again we have total of 90,141. So here we are done with the trading and profit and loss account and the balance sheet.